Hi, Tony Sycamore here, Senior Market Analyst at IG in Australia. Wall Street wrapped up a turbulent week on a steadier note, with Friday's session proving relatively uneventful, lacking major economic reports or earnings releases. This week is poised to be another eventful week with US CPI, retail sales, and a plethora of Fed speeches on the calendar. Retail sales will be under the microscope and could be a potential flashpoint. The all-important retail sales control group, which flows through into GDP, is expected to rise by 0.2% month-on-month in July, following a robust rise of 0.9% in June. We do not want to see a negative print there, otherwise we could easily see a repeat of last week's fireworks. Elsewhere, inflation's progress towards the Fed's target has been key in providing the Fed with the flexibility to cut interest rates if required. As such, this week's CPI data will also be closely monitored. Let's take a look at the chart of the S&P 500 and the NASDAQ to see where they are as we start the new week. Now, in last week's update, we spoke about the potential for the NASDAQ to accelerate lower towards the 200-day moving average, which is this orange line here, coming in currently around 17,700-ish. And of course, it did do that, also going through that level to pick up this uptrend support from the low back here at the end of 2022. That comes in around 17,400 currently. So my view is that while the NASDAQ is above this support region, we have to allow this rally to start to extend further, potentially up towards this high here, which is around 19,500. Then we'll need to see how things start to play out. But at this point in time, while above this support region here, we need to allow further upside. Of course, we do need to be aware that if the NASDAQ were to break below this uptrend support, it would probably signal that a deeper pullback is underway, or most definitely signal that a deeper pullback is underway. And I think 16,000 would become the target in that instance. Turning to the S&P 500, which this time last week was sitting above 5,400 before the capitulation on the Monday evening session, which took the S&P down. We were thinking probably down to this 51.90 low, but of course it exceeded that low, trading down towards 51.19. Now, what you can see here is that it is holding above the 200-day moving average. And I think at the very margin, that gives us some encouragement that the rally can continue. I think we'll see it continue, I should say, up towards 5,400. And then it becomes a bit of an each-way bet for me. If we can get above 5,400, then we could probably start to become more confident that we've got a tradable low in at this 51.19 low. However, if we start to fail up in this region here, you can see there's a pretty solid gap and quite a few lows coming in around 53.90-ish, 5400-ish. If we started to find that it was running out of momentum here, then we need to be aware that it's probably going to retest this 51.19 low with potentially scope to test the 200-day moving average coming in currently around 5,032. Thanks for listening and have a good week ahead.